Welcome to another broadcast of Real Turkey channel presented by Atilla Yaşalara. We cover Turkey, emerging markets, and whatever we like, honestly. Today's topic is emerging markets, also called developing nations, but the financial expression as an asset class, emerging markets has largely superseded and replaced developing nations. There is a contrast in the literature which I want to address today, adding the views of the Real Turkey channel. The majority of financial advisors and fund managers herald a new dawn for emerging markets, a new dawn, a new era of prosperity, where once again emerging markets like Russia, China, South African Republic, Brazil, Turkey, Malaysia, Indonesia will lead the world growth to higher rates as well as develop faster. That view is in stark contrast by supranational organizations which publish regular research on the world economy. Supranational institutions are sort of like IMF, World Bank, OECD, as well as the Development Agency of United Nations, which publishes excellent quarterly reports on the plight of emerging markets. I tend to be on the pessimistic side because most of the developing nations suffer from cyclical as well as secular problems. So, in this video, I propose to answer two questions. What are the biggest challenges awaiting EM in the next decade, and why EM can't sort these problems out? Let's start with cyclical problems. It is an accepted fact that because of the pandemic, the recovery of emerging markets has lagged beyond developed nations. The main reason for that is low vaccination rates and new COVID variants delaying economic recovery. As of yesterday, more than 5 billion doses of vaccines were administered, but the world's poorest countries had only a 1% share. Even in relatively prosperous Asia, the vaccination drives are going very slowly. In other parts of the world, such as Middle East and Africa, there are simply not enough vaccines to go around to vaccinate the whole population. So, the first problem here is that it is possible or feasible for developed nations to reach herd immunity in a year or so, unless new variants emerge. But for most of the developing nations, that future is at the very least 2023 or even later. We have to remember that slow growth poses several threats to emerging nations. First of all, their population growth rate are faster than developed nations, so slower growth means the relative disparity of average incomes between the two groups of classes is increasing by the day. And as you know, across the world, income distribution is getting worse, which means a slow growing emerging market is leaving a lot of the poor and young behind. And of course, it takes a labor force as well as better capital equipment and factories to produce output. So, in some sense, lower growth this year begets lower growth in the coming years. The second problem of the cyclical nature is that, like United States, like EU, most of the developing nations have borrowed heavily during the pandemic to cover the needs of the poor, the unemployed, and the sick. If a nation is growing faster in real GDP terms than the interest rate it pays on foreign debt is sustainable. But that condition will not hold for most of the emerging nations. Let me show you a graph. This is from an IMF blog and headline reads lopsided victories. At least for the short term, my thesis of emerging markets lagging developed nations in growth is very well demonstrated here. This is from the latest IMF World Outlook update, I think published in July, which clearly shows that IMF's forecasts for the future years predicts lower growth for EMs than the previous reports. Of course, because of the fact that they have more needs and growth and development is easier in a poor country, emerging nations are still going to grow faster than the developed nations. But the gap between two growth rates is closing to the disadvantage of emerging nations, which means whatever the previous estimates were, the amount of years for the average emerging market to reach the status of a rich country or developed nation will take longer than before. And to prove my thesis, I have provided more photographs from prestigious and reliable financial magazines here. This one is from the Economist, and the headline of the article is "The prospects for developing countries are not what they once were." I also added the link here just in case you wish to read this excellent article. And here, the Economist focuses not on the entire developing nations universe, but what used to be a famous expression uh, uh, discovered by uh, the Goldman Sachs O'Neill, I believe, which shows the rich G6 countries growing much faster than the BRIC countries. The BRIC countries are Brazil, Russia, India, and China. There's another one here. This is not from The Economist, despite what the headline says. It's from the Economics Intelligence Unit, which is an independent subsidiary of the Economist Group. And it's really alarming. The headline says rich countries' failure to vaccinate the world will do 2.3 trillion in economic damage. If you read the rest of the article, that's the damage the entire world, including developed nations, will suffer. The share of emerging markets in this loss is 75%. So we're talking about emerging markets losing roughly 1.8 trillion in lost output or in foregone output. And remember what I said just a few weeks ago. This is here. The war against COVID-19 caused a surge in borrowing, which needs to be repaid. And if you are not growing fast enough, the interest payments will come out of the budget for infrastructure, education, health, etc., etc. And more importantly, the conclusion from various publications that I have reached is that while United States has already reached the pre-pandemic level of peak GDP, and EU is expected to do so in a few quarters. China also too, I think, made up all of its lost output during the pandemic. For most emerging markets, it will take until 2025. 25. I am really sorry. It's like 40 degrees Celsius in the shade in Istanbul. Let me repeat the sentence. It will take at least until 2025 for most emerging markets to reach pre-pandemic GDP. So let's imagine the situation here. You have a group of nations, the growth rate of which had lost momentum. They will grow much slower than previous years, while in the meantime, because of the base effect as well as their capacity to deal with the COVID-19 scourge better, developed nations will gallop ahead. It was difficult for a developing nation to rise to the stature of a developed nation, now it's going to be even much more difficult. But these are cyclical problems. Remember, the title of the video is The Last Decade. And for this title to make sense, I also need to talk about the structural problems. These are long term problems, not related to the business cycle or to the pandemic, but that exists and they are unlikely to change and which will stymie future prospects of emerging markets further. Bad governance is one of them. If you look at the leading developing nations, Russia, China, South African Republic, Turkey, all of these display symptoms of poor government management. Well, Mr. Putin, I'm sure won't be, uh, Mr. Putin will not accuse me of being unfair if I call him a dictator. I don't think he cares. Mr. Xi Jinping in China is rapidly moving in that direction. Brazil doesn't have a dictatorship, but it has a very uh, volatile democracy where presidents are constantly impeached, and because of the fact that the presidency and the General Assembly are usually of different opinions, structural reform is almost impossible. In India, Modi used to be seen as a reformer, but nowadays he's more likely to be seen as a Hindu nationalist. So, bad governance really makes a difference in terms of an economy's ability to sustain high rates of growth. And here is an example. This is from Bank of International Settlement website, and Alejandro Diaz de Leon is the chairman of the Mexican Central Bank. I have also provided the link so you can read this excellent speech. It's not too long, but it emphasizes the role of institutions, legal foundations, a functioning market economy, regulatory institutions, as well as adherence to and trust in the law and justice. Unfortunately, many of the emerging markets do not belong to this category. Mr. Alejandro Diaz de Leon provided the example of Latin America, which is really in bad shape. But essentially, I can say the same thing about Turkey, about Brazil, about South African Republic, which, even though it's no longer an apartheid country, has never managed to resolve the tensions between black Africans and white Afrikaners or to close the income disparity between them. Turkey, of course, is my specialty where law and order simply doesn't exist. Law in Turkey has been diminished to whatever President Erdogan says. And clearly, this causes a major problem in terms of growth. Because if you don't have a solid judiciary, foreseeable regulations and laws, for instance, concerning taxation, strong protection for intellectual property rights, multinational companies will not invest into your country because they are afraid that in any potential legal conflict, the judges may take the part of the citizens of that country, which would lead to massive economic losses or even the exiling of the multinational from the said country. In other words, bad governance is not only a problem for now, it's not only a problem for human rights and individual liberties, but it's also one of the main causes of slowing emerging markets growth. Let's go back to the other factor here. Even before the pandemic, what we broadly call Industry 4.0, artificial intelligence, and robotics, robotics as well as, of course, the social media platforms were rapidly changing the landscape in terms of employment. All of these technological innovations are in the short and medium term labor replacing. In other words, they do provide wealth for their owners and probably for the society as a whole, but unfortunately, they replace workers, exacerbating the problem of unemployment. Now, because of the pandemic, all of these trends have accelerated. I mean, you probably see it from your own lives. I personally never used e commerce before the pandemic, then I was forced to use it, and now I realize it's much more convenient. Imagine a country where a lot of young people or low skilled people are employed in supermarkets, in shops, in shopping malls. And now, not overnight, but slowly, these jobs are being overtaken by machines or by algorithms. That also goes for industrial jobs, which are usually the best paying jobs in any given emerging nation, where robots, smart production techniques, as well as Internet of Objects is replacing some of the classes of labor. There's another problem here. Pandemic has exacerbated the education problem in these nations. If you look at a nation's development, Paul Romer, the Nobel winning economist, says, and I hope I'm not misquoting them, he is the advocate of the endogenous growth theory. The more skilled people you have in different branches of the economy, the more likely it is that there will be innovation and more efficient production. Now, of course, the productivity of a worker is not only related to the what kind of machinery she works with, but also to her skill level. And the skill difference has increased simply because there are several studies, both at global and regional level, which shows that remote education is not the same as in-class education. And again, take my country, Turkey, but you can say Sudan, Ethiopia, most of the African nations, Latin America, where access to internet is expensive, and most of the citizens rely on mobile devices to access internet. These are fine if you are riding a bus and want to text your friend or watch a YouTube broadcast, but imagine the plight of a 10-year-old girl who is trying to borrow her father or mother's smartphone to tap into the national remote education problem. Obviously, it's not happening. The US China rivalry is another major problem which will get worse in the future because it's causing massive dislocation in supply chains. It's redistributing the export potential of emerging nations from one country to another country. It has also another pernicious effect on trade, which is that uh, impartial nations are increasingly forced to take sides. That's very apparent in 5G technology, where United States says, well, if you want to use my technology, you can't use Huawei, and China is pretty much doing the same thing. So, this geopolitical tension is another reason which would slow down growth in emerging nations until they figure out how to make the best of the new world or strongly ally themselves with China or United States or its allies to make sure that the new supply chains go through their countries. Now, to show you an example of how bad the youth unemployment problem is, here is another chart from BBC, and I think it's taken from International Labor Organization. The global unemployment rate has risen strongly during the pandemic, but the unemployment rate for the youth, those who are between the ages of 15 and 24 has simply soared through the roof. And practical experience shows that if a girl graduates from high school or colleges, unless she finds a job immediately or within the first 6 months to exercise and hone her skills, she will forever be doomed to low paying jobs simply because we tend to forget very rapidly. And of course, the last problem, which has become prominent after we experienced the hottest July in world history and devastating floods and forest fires across the world, is climate change. The world is gearing up to fight climate change after the new report by the UN International Panel on Climate Change. But unfortunately, fighting the climate takes money. It is estimated, let's see if I've put this here. No, I haven't. It's estimated that on a yearly basis, the world will need anywhere between 250 billion to 400 billion dollars to mitigate climate change costs. Obviously, developed nations are in a position, even if unwillingly, to pay these expenses and to green their economies. But we're talking about nations in Africa where at least half of the population is under the poverty level, or nations which will be forced to spend a good portion of their national income on paying off the debt they accumulated during the pandemic years and before. So these nations will probably be tardy in terms of fighting global warming. And remember, global warming is not only a problem for those nations that are geographically located in the subtropical and tropical zones. Take Russia, for instance, which is a cold country, and I've watched a couple of videos on YouTube claiming that Russia will benefit from global warming. This is mad. I mean, the entire Siberia is under permafrost, and if that permafrost melts, the soil releases methane, which is 20 times more dangerous than carbon dioxide. And many of the natural gas and oil pipelines of Russia go through Siberia, so they'll have to be rebuilt. There really can't be any argument that any nation will gain from climate change. So, in essence, going back to the title, even though most investment bank research, strategists, and fund managers uh, talk about the virtues of emerging markets and how rapidly these dynamic nations will grow post pandemic, the humble literature search I've conducted covering most multinationals offer a starkly opposing view. Most EMs suffer from cyclical, that's short term, or business cycle related problems, as well as from structural deficiencies which prevent them from addressing their growth deficiency. It is more likely that in the coming decade, the world will increasingly split into haves and have nots, with have nots having lower prospects of ever catching up with the haves. It's a very ugly world, and it can only change under two conditions. First, developing nations adopt a functioning democracy, a functioning free market with strong regulation and better judiciary. Two, of course, the developed nations ought to help developing nations in terms of combating the pandemic and paying off the debts. There are already several discussions under the auspices of IMF and the World Bank to lower the value of this debt and for wealth transfer from developed nations to developing nations to better combat climate change. Whether this will come to see the fruition, I'm not certain. And until I see a concrete environment where humans, nations decide to cooperate rather than compete, the prospects for emerging nations look fairly dim. On behalf of PA Turkey, I want to thank you for watching this broadcast. Needless to say, if you like it, please share it with your friends so that we have a broader audience. This is Atilla Yeşilada presenting for PA Turkey and the Real Turkey channel saying goodbye from Istanbul.